Hey guys, Stock Saturday, and it's a slightly green week. Been sort of up and down week after week for the last sort of couple of months, really. Up about 3.5%, 11,000, compared to the S&P up 1.35%, and the Nasdaq 1.59%. Looks like the Nasdaq isn't quite at all-time highs just yet, but very close. But the S&P, sort of with a bit less tech, has smashed through an all-time high, 58.15 now compared to 56.67. So yeah, a couple of percent above previous all-time highs. So good to see sort of things broadening out a little bit beyond just tech. So yeah, sort of had some stocks doing reasonably well. TSMC pushing up to 190. I think that's a new high for me, and it's sort of closing in on the big 100%. Broadcom sort of doing reasonably well, 181. Prosus sort of off the back of the China sort of stimulus, still doing okay, although Tencent hasn't seen too much, and yeah, we've got some sort of China news to come to, similarly with emerging markets. Stellantis still sort of struggling. We sort of had some news of I think it was Chief Financial Officer being replaced after only sort of a year and a half, not exactly great, and sort of confirmation that Carlos, the CEO, is retiring. This is sort of wasn't unknown, but yeah, that's sort of happening. I think they said next year or 2026, so they're sort of putting plans in place to replace him. Whether they'll get someone quite as highly paid as him, he does get an awful lot of money. But yeah, there's sort of a bit of turmoil, I guess, with them. Share price hasn't been doing well. I'm in the red now, excluding dividends, including dividends, sort of still well in the green. But yeah, they're sort of struggling a little bit. I want to see the Q3 revenue and shipments to sort of get more of a real view and sort of see where I think they're going. And yeah, Himax sort of pushing up a little. Doesn't seem like too much news there, but waiting for the next earnings. So speaking of earnings, there's none again this week, but we're still in the sort of quiet period. But there is quite a bit of news. CleanSpark sort of updating us very, very regularly on their increasing hash rate. They sort of reported 28.7 exahash operating hash rate. They do seem to do only operating hash rate, which is quite nice compared to sort of Riot's deployed and operating, sort of being quite a large gap between the two. This does include CleanSpark sort of bringing back online what was affected by the hurricane, so that's not great, but yeah, good to see that back online and not sort of caused any damage, which was good. And then sort of a few days later they did update that they've got to 30, so that's very good, and they are still seeing 37 before the end of the year. Additional hash rate is anticipated to come online due to the expected acquisition of grid infrastructure this month. So that's looking good. And the growth does sort of slow down somewhat. It's been sort of growing, 200%, I think they're saying this year. Yeah, surged 200% since October 2023. But they expect to grow to 50 in 2025. So they're adding 13 from the end of the year to the end of next year, which obviously isn't exactly huge. It's about a third. But yeah, 50, very nice. So after last weekend, not getting a lot of detail about the China stimulus, everyone was sort of focused on this Saturday, and it looks like they've sort of announced some measures, but not a lot of detail. They haven't gone into specifics on exactly how much they're going to do. People are sort of expecting, I think it's between 2 trillion and 4 trillion yuan. which would be sort of 280 billion to 550 billion. But yeah, they have said they will be ramping up debt issuance. Size is still unclear. They're sort of saying, unless they give any more details, we're probably expecting a bit of a red Chinese stock market on Monday. They're saying they will support indebted local governments, more sort of subsidies to low-income people, recapitalising the banks and that sort of thing, stabilising the property market. So they're not sort of piling in loads and loads of money to buy stocks. That's not what they should be doing, really. But you'd expect this money to sort of, basically create the wealth effect, and the stocks would go up sort of as a second-order effect, if you like. So they're still saying they expect 5% economic growth this year, GDP growth, which is, very large. And yeah, they're looking to significantly increase government debt issuance to sort of boost this, basically, or well, boost what is probably lower than 5% at the moment without this. They did say there is still relatively big room for China to issue debt. So it's interesting. I thought they had quite a high sort of debt to GDP ratio and sort of various ratios already, but maybe not compared to, US and UK, of course, and Japan. So yeah, they think there's still plenty of room. They're expecting more data for September over the coming week, expected to show a bit of weakness, but the chairman of the National Development and Reform Commission, the state planner for China, said he's fully confident the 5% growth target will be met. So it was initially talked about sort of early last month, a potential 2 trillion yuan, 284 billion stimulus package to help sort of shore up property, banks, and sort of the less well off. But they're thinking with sort of revised data, more firepower might be needed. People have been talking about sort of 4 trillion yuan, potentially 10 trillion yuan as a sort of massive stimulus, albeit that wouldn't really be anything like what we did in sort of COVID times. That was about $7 trillion, where sort of 10 trillion yuan would be, 1.2 trillion, $1.2 trillion. So not exactly massive. So speaking of massive, what I would call pretty massive, TSMC's monthly revenue numbers for September, 251 billion Taiwan dollars. So that's Q3 over with. Always good to sort of get these numbers in advance of earnings, I think, and in advance of the other sort of semiconductor stock earnings customers of TSMC. So it's been very consistent for Q3, 256, 250 and 251 billion Taiwan dollars, which is 44%, 33% and 40% up on last year. So sort of compared to low 200s and sort of high 100s for Q1. That is a pretty good number. We don't really know sort of who it is. You'd expect sort of Nvidia are playing a big part in this, possibly AMD and Broadcom. I wouldn't have thought it's Apple, because we sort of heard iPhone 16 sales have been sort of fairly lackluster. And it's 44% up on last year, and we know that iPhone 15 sort of sold reasonably well. So unless they've got tons and tons on the shelf, you would expect this is probably the semiconductor, the fabless boys. So we'll have to see, but I would sort of expect this is foreshadowing a strong set of numbers. Just having a quick look at Prosus. This has obviously been rocketing up on the back of Tencent doing pretty well with the China stimulus. They do give this sort of handy and very, very up-to-date net asset value page on their website. So this is net asset value as of yesterday, they're saying. 162 billion dollars in assets and sort of 1.8 billion net cash. That is quite a bit, sort of 15 billion in debt and 17 billion in cash. So it's not as if those are both sort of much smaller numbers. And this gives a net asset value per share of 62 euros once they sort of calculate it all in. And shares are currently 40 euros. So it's still quite a way off, obviously. It's never going to, it's never going to be exactly that net value because you still have sort of conglomerate discount of owning sort of all of this lot and all the unlisted stuff. People always sort of apply a bit of conglomerate discount. They don't want to own all that. Some people are just buying it for 10 cent at a bit of a discount. And they don't want the sort of classifieds food delivery business. So yeah, there's a little bit of discount there. There's a little bit of discount for tax reasons, of course. They can't just, they sell small amounts sort of periodically of 10 cent, but if they were to sell the whole lot, then presume you have quite a large amount of tax to pay. Similar to sort of Berkshire, really. They can't just go and sell sort of vast amounts of stocks without paying a fair bit of tax. But yeah, they've been sort of seeing a reasonable increase in the 10 cent valuation. They did, of course, sell quite a bit last year, so not all of it is sort of seeing this run up. That's a little bit of a shame, but yeah, they're sort of still seeing good increase. Still have nearly 25 billion in unlisted assets as well, as I say, sort of food delivery being the biggest, and the classifieds business, some in payments and sort of fintech, education. They are sort of still selling off the odd, the odd bits and pieces. They exited Trip.com, a Chinese e-commerce company, for $743 million. So yeah, interesting. Sort of getting rid of Chinese stuff. Noticed Walmart sold its $3.6 billion stake in JD.com. They sort of had a long-running partnership with them. But yeah, they do make obviously loads and loads of smallish investments through sort of Prosus Ventures. You can go on there and they sort of say every week we've invested sort of $10 million, $20 million in this and that. Some of them do well, some of them go to zero, of course. That's the venture capital world. But yeah, what they seem to be doing with all of this, all of these sales and the 10 cent sales and all this sort of cash on hand is buybacks. So you can sort of look at their recent buyback news. This is sort of every week. They're saying we've bought back 75 million euros worth of shares. 10th September, 76 million. We had 79 million, sort of starting to ramp up a little. 85 million and 162 million euros on the 1st of October. And then 8th of October, the most recent one, 195 million euros. So, sort of, as the price rises, they're ramping up share buybacks, which is not really the way you're supposed to do it. But yeah, they're sort of increasing that into increase in price, maybe trying to get a bit of momentum going, or sort of add to the momentum of 10 cent going up, and sort of maybe trying to close that gap. But yeah. Interesting sort of interesting method. Maybe it is part of the Trip.com sale, I suppose. Sort of putting that straight into buybacks. So looking at economic news for the week, somehow, as I say, UK house prices still keep seeming to go up. Halifax reporting 4.7% increase on last year. So that's a little bit crazy. 0.3% increase for the month. Higher than expectations, same as last month. And it was sort of a little bit quiet sort of until Thursday, really. Jobless claims was quite a bit higher than expectations, 258,000, and continuing jobless claims up quite a bit. Has been noted by a few people that obviously you don't get this jobless benefit in the US forever. I think they said you get it for about 26, 27 weeks or something, and then you stop getting it. So people that are sort of unemployed for quite a long time will sort of they'll be in the initial numbers, and then they'll be in the continuing numbers for quite a while, and then they'll drop off. So you would sort of think, if you were seeing a large drop off in continuing claims, you think, oh, those people have got jobs, but it could just mean that they didn't find anything and they're now off the benefits, but still unemployed. So you can sort of see little quirks between this sort of continuing jobless claims and initial claims and the unemployment rate. So yeah, they're interesting figures, and they're sort of weekly, so it's quite up to date, but yeah, they don't always tell you everything, but they're both higher, so that weren't great. And then CPI for the month, all higher than expectations. So headline 0.2 and 2.4 for the year, core 0.3 and 3.3 for the year. So everyone's sort of fairly happy that headline is down and is sort of closing in on 2%, but core is increasing. I think that was 3.1 the previous 2 months ago. So up to 3.2 and now up to 3.3, sort of indicating that services, which are the bigger part of the US, potentially, indicating there could be a rise going forward. Energy and food sort of comes into the headline and could be sort of bringing that down. That was it for the news, really. Not too much. So looking at the portfolio, sort of seen a bit of a jump up in crypto and gold and silver on Friday. That sort of spurred the portfolio on. Might not have really been green without that, but yeah, good to see. So gold still sort of hovering around the all-time highs. It didn't really it was up $35 yesterday, but didn't really sort of seem to help the gold stocks too much. I think should do when the Q3 earnings come out. I presume they're going to be really strong, and I'm kind of hoping that institutions and sort of analysts haven't really been focusing on sort of what the earnings could be, because a lot of I mentioned people like Equinox are still sort of forecasting this year's gold, and EBITDA forecasts and that sort of thing at like $2,200 gold, and even next year for $2,200. So yeah, it's 2650 now. You would think estimates needed to be raised, basically. So yeah, I think earnings should sort of see these rise up a little bit. Obviously, I've got big targets on the option side for the gold and silver side and the crypto side, really. But we'll have to see. Not a lot of change in the REITs, and yeah, not really a lot of change elsewhere. So Pan American sort of pushing up 22.25, not too bad, getting towards break even potentially. KGHM still looking good, copper sort of looking reasonably good, and silver sort of pushing back up to $31. On the option side, I've bought pretty much nothing but Hive this week, a hell of a lot of Hive. Whether that's a good idea or not, I don't really know, bringing my average down certainly. But did buy a little bit of Equinox and a little bit of Riot, just sort of when those two come down. But yeah, Riot has sort of took the Friday's Bitcoin move reasonably well. Hive hadn't really, so I've been buying more of them. I think people just aren't happy that they haven't, diluted to increase their hash rate, albeit they are now starting to do that, which I sort of mentioned last week isn't the best time to be doing it. They're expanding late next year, which could be the end of the bull run potentially. So it's not great, but I still think they're very undervalued for that reason. They have sort of getting on for half their market cap in just Bitcoin, and they've got the sort of AI side potentially growing to what they say by next year, $100 million a year in annual revenue. So yeah, there's still a lot to like. Equinox still has gone back into the green. It keeps sort of hovering above green and red by a bit. It's all very volatile, but again, I think the earnings should see them do well. And I've got a little bit of cash left, £1,600. Sort of got a little in the bank that I could add, and sort of potentially thinking about maybe taking a bit of profit on either Prosus or Vanguard Emerging Markets. I was sort of kind of hoping for a big Chinese stimulus package this weekend, and that may have sort of shot things up early next week, and I could sort of sell a little bit off for a profit. I think Prosus was already at 12,800 at one point, and emerging markets is sort of pretty much near the highs. It was at sort of 10,700, 800, I think, but yeah, that's obviously not all China. But yeah, if we get sort of a reasonable rise in this on a little bit of detail, then I may be sort of taking a little bit of profit. Probably I wouldn't be selling the whole thing, but just sort of top up to hopefully about £4,000, and I could sort of add this in here. Maybe get sort of what I'm hoping would be last opportunity to maybe buy things like Hive and maybe a little bit of Riot. And I do want to buy the January 2027 Equinox shares, because there's always possibility that Equinox doesn't really get going as much as I thought next year. I'm not expecting obviously crypto to be very good in 2026, whereas gold I certainly would do. Could be sort of getting a recession potentially in 2026 if it's sort of delayed quite a bit longer than people are expecting. Doesn't look like it's going to come next year. Could potentially come in 2026, and Equinox are forecasting huge EBITDA numbers there. So yeah, giving me 2 years and 3 months for those options, I think looks pretty good. But there isn't a lot of liquidity in them just yet. But yeah, I would like to sort of buy some of those for the very long term. So we'll see. See what next sort of couple of weeks brings. So leave your thoughts in comments below, and like and subscribe. See you soon.